Hi, this is Anthony, and welcome back to my show. We've all heard that hard assets like gold are good investments, but are they? I want to keep this video very short, and what I'm presenting here is not investment advice. However, if it were investment advice, I would point out that I cannot think of a single piece of financial advice that is true for all people in all cases. For instance, if you live in the United States or in Switzerland, it would be prudent to save your money because you'll need it in the future, to pay your rent or to buy food or fuel or for retirement. However, if you lived in Zimbabwe 15 years ago or in Weimar, Germany 100 years ago, then saving money during hyperinflation is not a prudent financial practice. But in those two cases, for instance, would buying gold be prudent? If you were living in Germany 100 years ago with hyperinflation, then yes, buying gold would be a prudent move to make. The same holds true for Zimbabwe pretty much for the past 40 years. So I point this out because any type of financial advice, or in this case, financial entertainment, needs to be carefully considered if it meets the needs of the individual receiving it. I'm going to assume that most of my viewers are from the United States or in some cases from other English-speaking countries around the world. Please process what I say here through the lens of what is appropriate for your situation. As I begin, please don't forget to hit that subscribe button to the bottom right of the screen. It doesn't cost you anything and it helps me out building this channel. Thanks so much. So, for today's charts, I'm going to be using charts that show the SPDR, or SPDR, gold shares. Ticker symbol GLD, which represents approximately 1/10 of an ounce of gold. Now, I don't need to point out to my viewers that currently there are a lot of negative financial events going on in the world. The United States and many other so-called Western industrialized countries are experiencing levels of inflation that we haven't seen for dozens and dozens of years. We're just getting over a worldwide pandemic, which of course has impacted daily life and business in a way that we haven't seen in over 100 years. The United States is probably in a recession, and if it isn't in one technically now, it will likely enter one soon. There's a devastating and unnecessary war going on in Ukraine, which has affected the price of fuel, fertilizer, and grain to some degree, and this situation there has caused ripples throughout European and Eurasian societies, economies, and infrastructure. The consequences of this could last for many, many years, and at this point there is no end in sight to the war. And of course, with the saber rattling comes the threats of the use of nuclear weapons. And on the political scene, the United States is about to hold congressional elections, which will likely change the American political landscape, and who knows what will happen in 2 years for the presidential elections. England has had a revolving door at number 10 for a number of years now, and large countries such as Brazil have recently held presidential elections. In the case of that country, returning to office a disgraced leftist ex-president who had been in prison a year ago. So it's in times of turmoil like this that gold bugs point to the benefits of holding on to gold, usually physical gold. But if you want to own gold and not deal with the physical gold, buying shares in GLD is one way that you can accomplish this. So let's look at the chart of how gold has done year to date with all of the recent turmoil in the world. As we can see, it is down 8.83% year to date. And you can see the spike up there soon after the invasion of Ukraine. One would think, based on conventional wisdom, that with the high inflation rate that we're currently experiencing, plus all of the uncertainty, that gold should be going up, not down. Let's take a look at the 5-year return on gold. In this case, it is up, and it's up slightly over 27%. But if you think about it, a 27% increase over 5 years is a little over 5% per year. Not a very good rate of return, especially considering over the course of much of that time the stock market has done extremely well, and your fairly meager 5% per year rate of return will be nibbled away at by inflation. Now let's look at the past 10 years. 10 years ago today, the price was $162.60, and today the price is $153.46. So in the past 10 years, based on when this video is being uploaded, you would have lost $9.14, and that's not including your loss of purchasing power due to inflation. So I want to wrap this up. There are times here and there when gold might spike up, and if you were lucky, you might make a fairly quick profit. But for many, many years, the current price of gold has pretty much gone sideways, and in constant dollars, that is adjusted for inflation, the price has gone down. You'd have lost money as a long-term holder of gold. So what do you think? Even after seeing the historical data, do you still think that gold is a wise investment for people who do not live in a high inflationary economy? And by the way, I've done other longer videos on both gold and silver. The returns on silver are even worse than on gold. Be sure to check those out too. As always, please leave a comment in the comment section below. I would love to hear from you, even if you disagree with me. And I would appreciate it if you haven't already. Please subscribe to this channel. And I would love it if you looked at my other videos and hit the like button on those too. You can find me on Instagram at Anthony R.R. Mills. For my American viewers, I sell collectibles on eBay. Things like old stock and bond certificates, coins and banknotes, postal items, books, and Masonic items. I only ship to addresses in the United States, but if you have one, please look for my items. My username on eBay is stock_tycoon. Thanks so much for watching and good luck in investing.